Okay, we've got Mark Matthews also joining us now. Let's go across to him and get an understanding of really how this could impact the way forward. The fact that Pfizer has announced that they're so close to really getting the vaccine out to people. Mark, thanks so much for joining us. Record-breaking run on the back of that news that we saw across Wall Street and then over across in Asia as well this morning. Does this pretty much overshadow any concerns of the stimulus in the near term? Do you feel this could be an inflection point or more of a knee-jerk reaction? How are you viewing the kind of momentum that we saw build up yesterday?
The U.S. market actually lost a little bit of its froth in the late trading day when there was some story about how the stimulus wouldn't be very big. That was after Pfizer made its announcement. So I think stimulus is still there in the market, but if there's not enough fiscal stimulus, there will be monetary stimulus. I think of that we can be safely sure. And whereas fiscal stimulus can get directly into the pockets of people who need it on Main Street, monetary stimulus has this uncanny way of going into Wall Street. So although it's not as good for the economy, the market likes it even better. And on the vaccine, I believe it is a game changer because, number one, I don't think many people expected this big third wave in the United States and Europe that we're seeing presently. Probably, a lot of people expected that there would be a continued rise, but this is much bigger than it was before, and deaths are starting to pick up too, so it's not a good thing. Therefore, it's extremely opportune that we get the news, and I think there was also increasingly some skepticism that on the vaccine because people thought maybe the pharmaceutical companies working on vaccines were being a little too positive, either to please, I don't know, the general public or politicians. So there was some skepticism over whether they were actually going to make the announcements that they had pledged. Pfizer had been saying for a few months now that they were going to give us some good data in November. I think it's a game changer, yes. I think it allows us to look over to the other side of the abyss in a much more real way than we could have 24 hours ago.
Fair enough. In terms of what this means for emerging markets, particularly India, do we continue to see, fund flows pouring in, in terms of the new presidency and now this kind of wave as well? What does this all really add up to when we're talking about it from a market perspective here?
Even though we know it will be many months before this and other vaccines are available on a really mass basis, in other words, to billions of people. So we know that this vaccine will be available to tens of millions of people, frontline workers, by the end of this year, but that's hardly the whole world. So, and by the way, this particular vaccine needs to be stored at minus 80 degrees Celsius. So it will be a challenge. It's not an insurmountable challenge, but it'll be a challenge to distribute. I think with everybody dedicated to the cause, it can happen fast, but it's a challenge. I would also point out, by the way, that it's not the only vaccine, and the Moderna vaccine also uses mRNA. And so I think we're going to get more good news on the vaccines. And to answer your question about emerging markets in India, I believe it is very positive for them. Number one, because many emerging markets, including India, were unable to adequately suppress the spread of the vaccine. This is obvious, isn't it? Because they're very big populations and people can't stay at home. Many of them live hand to mouth. They have to get out and work. And so, number one, this vaccine will be very good for the emerging markets with large populations. And number two, many emerging markets still are concentrated in the materials, industrials, kind of, if you know what I mean, value side of of the market, which is real economy stocks that, of course, benefit from a normalization in the real economy. We know that the new economy stocks benefited from the vaccine, from the coronavirus. The opposite also stands true, that companies dealing in the real economy will benefit disproportionately from a vaccine because they got hurt disproportionately by the coronavirus.
Sure. Mark, it's also time to tactically realign your portfolio at a global level. While you're assured that liquidity is a flush, we could debate about the quantum of the stimulus, but does it make emerging markets stronger as opposed to the developed markets? Do you allocate more to gold, or do you increase your exposure to equity because of the risk-on trade?
Well, the answer to that question depends on what your portfolio looks like now. But having just said that, I think that this news is disproportionately positive for cyclical companies and the emerging markets. Therefore, those are the kind of things that I expect will do better in this period in front of us. Longer term, though, the forces that were behind the new economy companies haven't really gone away, which are the acceleration of their own technologies, the acceleration of their usage, and their ability to scale out into many other sectors through the digitalization of the economy. That trend won't go away. So, you look at a share price of a company like Zoom that was sort of going like that, and then it went like that. It won't keep going like that. But over time, I don't want to say where it's going, but I want to say, that those new economy companies, they still have bright futures. And by the way, we are in a kind of Goldilocks, for lack of a better way to put it, environment now, because we do know that the vaccine will allow us to get to the other side of the abyss. But in between now and then, we also know that central banks and governments will continue to provide a lot of stimulus and liquidity. And so low interest rates do favor growth stocks. So long-winded answer to your question.
Sure. What I was also wanting to get to is, everyone has a limited pool of fresh cash, right? So do you take money off from IT and pharmaceuticals, which globally as well have done well, and now do you deploy them to the economy-linked names? Or would you say, keep your money parked there because the long-term prospects of an IT and pharmaceutical sector continue to look good as it is?
I would say keep your money parked there, actually. I think if you want to take call it a 5-year view, that's an awfully long time. Maybe 5 years is too long. Even if I said a 2-year view, I still think that the new economy companies have a lot of wind in their sails, and I wouldn't necessarily be looking to reduce my exposure to them dramatically. I think there's still the place to be overweight. But, I should be truthful. Yes, maybe trimming them a little bit to go into some of the really bombed out stuff. Although after last night, Carnival Cruises and whatnot, they're not so bombed out anymore. But certainly they're far from their previous highs. So yes, I would actually trim a little of the new economy to put in the cyclicals.
Okay, Mark, great to have you on the show, and thanks as always for that insight. Keep your portfolio balanced. That's the word coming in from Mark Matthews. 100 points up on the Nifty right now. That initial adjustment seems to be digested, and we're back to our winning ways. And the breath as well is now opening, and it's off the day's lows. Good going for the comeback names: Interglobe Aviation, PVR, Bajaj Finance, IndusInd Bank, UBL, your top winners within the liquid universe. We'll take a very quick break on that note. Lots more lined up on the other side.